Right, welcome everybody. I have 9 o'clock. Welcome to the third installment of JCCS's live Q&A covering all the various relief provisions that are available to businesses during this COVID-19 pandemic. We want to thank all of you for taking your time out of your busy day. I know a lot of you are probably preparing to reopen your businesses, making plans there, so we appreciate you taking time. Just a couple of housekeeping items this morning before we get rolling officially. We are recording the session once again, and we'll have that available on our website. And we'll also put out a link in our e-newsletter when that's available. That typically takes us a couple of days to get formatted and rendered and posted on the website. So look for that sometime around Monday afternoon. We'll also be again taking live questions, funnel those to the Q&A section. There's also a chat box, but that's more for technical issues. So if you can funnel all your questions to that Q&A session, and again, remember as a participant, you can vote those items up to make sure they bubble to the top of the list and we get those questions answered if there's something that's really pressing out there for the participants. Again, we're going to try and stick to that 1 hour disciplined time slot with the content, and we're going to answer as many questions as we can possibly get to in that 1 hour. And then, of course, we'll stick around a little bit after if we've got some some additional questions that we need to get answered. So today we're really taking that next step in this PPP loan process. Businesses now have those funds, and there's some important steps that we really think businesses need to take in making a plan and preparing for what's next in that. I'll also be, towards the end, I'm going to cover the extension bill that was passed by the Senate and the Congress and is awaiting the president's signature. I'll do that towards the end. And then I'll also kind of cover Montana governor's announcement on reopening the Montana economy and touch on a few points that we think that businesses need to consider. So with that, I'm going to hand off to the first session. So I'll hand it off to Jake.
Great. Thanks, Tony. And again, yes, welcome everybody. We do really appreciate you guys taking the time and hope you get something out of it. So here we go. I think before we dive in, before we really start deep diving, I think it's important we just remember kind of where we're at, how we got here. I think a lot of businesses are still, with the intent here to make sure they're doing everything they possibly can. There's so much in the media, and I think just this short list is really, in general, what's been made available. Absent from this list are some of the unemployment options for the employees, but really for the business owners. The top two are kind of the mainstream items, the PPP and the EIDL. EIDL kind of has fallen flat just in the past few days, though. We are starting to see those funds starting to trickle in. So that's probably going to be something that is our next wave of help for our clients. And so, but today we're going to primarily focus on the PPP, but we can't lose sight of those other options, especially the employee retention credit. And then if, depending on how everything shakes out, if there are times where we do need to be super mindful of cash, potentially implementing a delay of payment of the employer payroll taxes is something that available for relief as well. So just being mindful of all these, that there are things out there, but if our focus today is PPP and that's what you have, I mean, that's what we're going to dive into now. So just want to make sure we knew what else is going on out there. So okay, we've decided to really take a deep dive here and address the PPP. A lot of you have officially received those funds, and if you have not received those funds, as Tony will talk about a little later, there's kind of a round two coming. So a lot of you are either kind of next in line, or you do have the funds. And so it's now the question we've always been pushing for. Okay, we got to get the money, and now officially we have the money or are about to. So what do we do with it? And obviously the most attractive component of this piece of the PPP is the fact that there's loan forgiveness, potentially as much as the entire amount of the loan. And so if you can kind of kill two birds and not only take care of your employees, but also with the fact that it's a forgivable loan, that's really the ultimate goal here. So that's what we're here to help you with. And to accomplish that, we've been going back and forth, running scenarios, and it can be incredibly simple, but it can be incredibly complex, and it can also be just the smallest thing can hold you up and quickly turn a loan from being fully forgiven into maybe partially. And then there's thousands of dollars that if you end up spending and then have to owe back, I mean, that could be a detriment in itself. So we really are hitting home to really focus on formulating a plan. And that kind of is broken down into 4 items. It's first off, understanding the basic rules. We'll go over those really quick. And then it's just some best practices surrounding the accounting of the money, both the income and the expenses. And those expenses are included, are the payroll costs, and then also lined out are some other costs. So let's quickly just go over the kind of the basic ground rules. A lot of people are probably pretty familiar, more or less. There's, in general, if you've received your funds, one of the big questions we have right away is, when does that 8-week clock start? Was it when I submitted my loan, got approved, got the money? It's when you got the money. So once that money hit your bank account, the 8-week clock starts. And that can be significant, because as we start nearing the end of that 8-week window, we're going to realize that maybe we do need extra time, or we need a more accruing of expenses. And so just being mindful that that's when this clock starts. And then at a very basic level, at least 75% of those loan proceeds must be used for payroll and payroll related costs. And we'll go into that here a little bit. And also no more than 25% of the loan that's forgiven may be spent on the following 3 items. Again, Aaron will probably touch on this a little bit. I will as well. But you've got your payroll costs, and then you've also got these other costs, and no more than 25% of ultimately what is forgiven of the loan can be inclusive of rent, essentially business debt, and utilities. And we have listed here a couple of examples of or reminders of the definitions of each of those. I know I'll harp on it a couple of times. Aaron will as well. But to start getting you understanding the fact that rent, there must be some sort of an agreement in place. So if there was nothing written and you're just paying this money out, that's not going to qualify. To get that loan forgiveness, you're going to have to supply a written loan agreement, and that had to have been enforced prior to February 15th of this year. Same with most business debts. If you own your own building inside the business, or if you own a warehouse of some sort and you have debt on that, that loan, the interest portion of that can be part of those other costs. And then utilities, pretty broad definition of those: electricity, gas, water, telephone, internet. Transportation and fuel is one. We're getting a lot of questions on that. The SBA pushed out some guidance for self-employed individuals, and they happened to mention something about fuel. And so we're kind of being a little cautious of that one, because that could be interpreted as just all gas for a business vehicle. It appears it's that way, but we just want to be careful. We'll hopefully see more guidance on that. Okay, so once you understand the rules, then we're kind of diving into those best practices we talked about. And right away, a lot of you probably have this question: Jake, the money hit our bank. Where do we categorize it? Well, don't forget, this is a loan, so you need to put this on your books as a liability. It's a 24-month loan, just out of the gate by default, 1% interest. So this is a long-term liability. Throw it on there, and now you've got funds in the bank, and now you're ready to start spending those dollars. A lot of questions have come in: do I have to have a separate account? I think there's a lot of banks actually setting up separate PPP bank accounts. That's great. Is it required? Not to our knowledge, but it certainly is, just if we're looking after a best practice, having a specific account certainly won't hurt and will just help you identify, you start picking away at those funds. And then as you start picking away at those funds, right, those are your payroll costs, those are your potential rent, mortgage interest, and utility costs. We recommend using classes. A lot of our clients and a lot of you out there are probably either on maybe a QuickBooks product that you can use class codes. And there's a lot of other products out there that offer class codes. So essentially you expense it to your payroll, but then you earmark it as PPP or do something that when you can run a report, it dials in on all of those exact expenses just to help isolate those expenses. If you don't have that capability, you can obviously run an 8-week report that tries to confine where all of your expenses were, and then hopefully you can go through and identify those ones that could ultimately be forgiven. But just visually, if you can run a report and dial in on exactly what those expenses are, just a much cleaner, professional look for when we're submitting information to the lender. It's less questions that they're going to ask. So we're really just pushing that home. If you are using classes already and that's going to disrupt that, maybe you're trying to double class something, it's for this job and that's a PPP cost. We're going to run into maybe some issues there. We're going to have to get creative, memo lines, something like that. And then ultimately, we're gonna determine how much of this loan is forgiven, and that's going to be adjusted. You're gonna reduce your loan down to however much we determine is forgiven, and that's going to be an offset to it's kind of deemed other income, but really for tax purposes, it's a non-taxable income item. So ultimately, then gets rolled to equity. So those are the best practices for accounting. Now let's talk a little bit about the payroll costs. Aaron, too, will talk about this in great detail. But in basic terms, you're going to need to calculate your FTEs. That's a term that gets floated around a lot. FTE is full-time equivalent employee. And that time frame, you get two options. And you can optimize essentially to kind of what's best for you. And those two options is a look-back period to determine your FTEs, full-time equivalent employees, prior to the COVID-19, and then post when you're going in for loan forgiveness. So essentially at about that June 30 mark, and we'll talk about that more. So you're having to determine this number, and here's your time frames: February 15th through June 30, or of the previous year, 2019, or the first 2 months of 2020. And so we're just making sure you optimize that. And then, so that's kind of, that's one aspect that Aaron will talk about in terms of the loan forgiveness process, is that you're having to calculate the full-time equivalents before and after, so to speak. And that potentially could reduce your forgiveness of the loan forgiveness if you have a decrease in employees. The second wave that we need to be mindful of is that there's also going to be a calculation based on potentially underpaying an employee. And that's calculated based on, it's kind of looked at on a weekly basis for the most recent full quarter paid. So if we're sitting here today and we're analyzing, this is analyzed on an employee by employee or position by position basis. If employee number one is on the payroll and we're determining if they're being underpaid, we look to the most recent full quarter that they've been paid. Possibly if you've been in business this whole time and there really hasn't been much change other than, of course, just sales. If you've been paying them just nonstop, the most recent full quarter will be Q1 of 2020. You look at what you've been paying them there on a weekly basis, and we extrapolate that during this time frame, this 8-week time frame of using your PPP funds, and we make that calculation there. Possibly have to go to the previous quarter or any previous quarter before Q1 2020 to make that calculation. So just be mindful that there's multiple facets of calculations being done that potentially will reduce this forgiveness of your loan. And then other costs to keep in mind that go into the payroll costs. We have listed here, there's healthcare costs, retirement benefits, and some state and local taxes can potentially be wrapped into there. Also being mindful, there can be kind of a strategy behind when you're rehiring employees. A lot of you maybe had part or all of your workforce either furloughed. And so now the decision is, when do I bring them back on? What's the most advantageous time to bring them back on? Well, it's a case-by-case decision, because you either have to kind of make the decision if you're going to bring them back on, and June 30 is kind of like the mark. Aaron will talk about this, of course. June 30 is kind of considered where you got to you got to get your staff back on at full capacity. How close do I wait to that June 30? Can I operate right now? Then maybe I should start bringing them back on. That's the whole idea of this program, is to get people hired again. So, or do I wait longer? Maybe I can't open up yet. So, just case by case basis, we have to analyze that on with each of our clients, and then possibly paying out bonuses or additional wages. Are they reasonable? Are they allowed? Right? We have limitations on how much we can pay each employee. There's limits there, because you can't overpay someone, because there's limits in place. So that's just kind of the basic idea of the payroll costs. And then the other covered costs that I kind of touched on, it's you're having to determine these other costs. You review the comparable quarter. So if we're looking at Q2 of this year for rent, for example, you need to review what the comparable quarter was, and make sure that those are in line. Now the rule is we have to look before February 15th, but there is a requirement to look back at that previous quarter to confirm that those two were being paid then as well. And then calculating out your estimated rent expense based on that rental or lease agreement, as I mentioned before, is going to be important. And then also, don't forget, we have that rule of the payroll costs must be at least the 75% of the overall loan proceeds. We just have to be mindful that the other covered costs can't be more than 25%. And this is important to note, that it's 25% of the loan forgiveness amount. So if we determine that there's reduction in loan forgiveness, we have to be mindful that those utility costs or the rent can't be more than 25% of the forgiveness. Payroll cost is 75% of the loan proceeds. The other covered cost is 25% of the loan forgiveness. So that could be kind of that's yet another calculation that we're having to juggle to make sure we stay compliant. And then I think the final thing I'll touch on, I think we have probably a lot of self-employed individuals with us today. And everything I've been talking about has really been geared towards the idea of having employees. And some of you who are self-employed probably do have employees. And so a lot of this will apply to you. I think it's really important to mention, though, that let's just assume, for example, you're self-employed, no employees, and you got a loan of, let's say you received your loan, and remember, when you calculated this loan, it was based on your average monthly payroll cost in 2019, and you multiplied that by 2.5 to get your loan. Well, there's a specific limitation on how much you can, quote, pay yourself through draws to be allowed to have forgiven in this loan forgiveness calculation. And it's I refer to it as kind of the 8 out of 52 rule. So they're looking at it from the pure perspective of a weekly pay amount, and they're basically saying that if you look at 2019, divide it by 52, your net income by 52, multiply it by 8. That's the largest amount you can take as a draw as a self-employed individual to have that loan forgiven. So you can't just take your full proceeds and say, I'm going to draw it all out and call it payroll, call it a draw, and have it all forgiven. They're putting a stop in place here, 8 out of 52. So if you did the math on that, that's only about 70 to 80% of the actual loan itself. You're going to have to come up with other costs, those other covered costs, to really utilize all those funds. If you don't have those costs, maybe you're just super low overhead, you don't have rent, you hardly have utilities, maybe you have a telephone expense. It's possible that you can't get full forgiveness here, and so you might have to send some of that money back. But it's important to note, I just think, that the same rules apply for self-individuals with employees that we've discussed and we'll continue to discuss. But specifically for pay for a self-employed individual, there is kind of one of the very few bright lines we've been given during this whole time, specifically to make sure that all of the proceeds aren't just flat used on draws here for self-employed individuals. So with that, I will hand it off to Aaron, who will go over the forgiveness aspect a little bit more in detail, as well as substantiation of that. So take away, Aaron.
Can we add just a couple questions that have been upvoted?
Yes.
Before absolutely. We go to the forgiveness part.
Absolutely.
There's a question about mobile phone plans and whether they're considered a utility.
Yeah, so it certainly is considered a utility. And if we go directly to the CARES Act, they say that it must be a plan that was in service prior to February 15th, 2020. What we do not know is how I would say that perhaps a good majority of people that account might not be necessarily in a business name. And so what we really don't know yet is if that is going to just blow that out of the water and not qualify, because a lot of what is stated is that it must be in the name of the business. So I'm not sure, Tony, do you have anything to add on to that, or I've seen any other guidance that's other than that?
No, I think it comes down to who's doing the verification. There's you may get a particular bank that's interpreting that a little bit narrower. I think for the most part, if you've got a business deduction for cell phone in your business, they'll accept that.
Yeah. And we've also, in the past few years, trying to set up these appropriate reimbursement plans. If that's being done correctly, such as, an S-Corp employee having their cell phone expense reimbursed. And I think if you're going that route, I think it's a lock that you will get that. It'll be covered in these forgiven costs. So good question.
Jake, we also had a question about accrual of expenses. Can the expenses be accrued and not paid, or do they need to be accrued and paid within the 8 weeks?
So they most certainly need to be paid within the 8-week period. And then there's kind of a key word is going to be incurred. So from the February 15th date, any expenses incurred since then and paid in that 8-week period will qualify. So there could be someone out there that maybe struggled to pay their March rent, for instance. And our understanding is that because it has incurred and you now have gotten PPP funds, and as long as you can certainly, the PPP funds, right, can be used you can kind of use it for anything. To get that loan forgiveness, though, you then have to make sure you're not paying too much in rent, right? Because if you're going to pay your March rent and April and May, you might be stacking up a lot of rent expense at that point, which might not be within that 25% number of loan forgiveness. So you got to be mindful of that. But I think to answer the question, as long as it's incurred and paid incurred since February 15th and paid in the 8-week period, it should be thrown in the mix.
And I'll just expand on that. So incurred is going to be whatever your regular basis of accounting is that you report on. So if you are a business that reports on the cash basis method, that's going to be your measurement for incurred. If you're an accrual basis, your incurred is going to be based on accrual. And then, of course, the paid is a pretty bright line.
Yep. Thanks, Tony.
How about rent paid to disregarded entities or related parties?
I think they will certainly qualify as long as you have a rental agreement in place by February 15th, 2020. Had had a rental agreement in place. So I kind of mentioned that a little bit. I mean, I think, I've seen where, rent is just getting paid and there's really just, it's one and the same. So there's no agreement needed. I do think they're going to require, I mean, they stated we have to have rental agreements in place. Yeah. So it's certainly allowed, must have an agreement in place.
All right. So let's go ahead and get started on the forgiveness and substantiation section. As Jake said, there's the split of forgiveness. The other covered costs can't exceed 25% of the loan forgiveness, but you can use payroll costs to cover all of the loan forgiveness. So payroll costs can be anywhere up to 100% of the loan to be forgiven. To substantiate payroll costs, be prepared to provide your source documentation from whatever payroll system you're using, your federal and state payroll tax forms, any explanations for significant variances in the payroll from Q1 or Q4 or whichever quarter you're using to determine your reduction or increase in wages. So we don't know if they're going to ask for that information, but it would be good to have some documentation on hand just in case the question's asked. And then also the full-time equivalent count and comparisons for the selected period and each pay date in the covered period. So to go into the full-time equivalent a little bit more, we've seen a couple different ways to calculate out the average full-time equivalent count. And there doesn't seem to be any specific rule on that. So what we have decided to do is to take the hours worked in a given pay period within the selected period that we've chosen, which Jake mentioned is either February 15th, 2019 through June 30th, 2019, or January 1, 2020 to 2/29, 2020. So taking each payroll's total hours and dividing it by 30 hours as being a full-time equivalent, and that will give you a number. We've also seen people dividing by 32 or 40 to get their full-time equivalent. And really what it comes down to is making sure that you're using the same type of calculation on your selected period to comparing it to your 8-week period. So if you're dividing by 30 hours as a full-time employee per week, you just want to make sure you're consistent from one to the other. So that's basically how we're calculating out FTE, is just taking total hours worked, dividing it by the 30 hours a week. So if you have a bi-weekly pay period, you would divide by 60 and so on for whatever payroll schedule or payroll frequency you use. And then also for the other covered costs, as we said, it can be up to 25% of the loan forgiveness calculations. For substantiation on the other covered costs, we expect to be asked for mortgage interest statements, maybe amortization schedules. We aren't sure if they're going to request the mortgage or other loan origination documents. They might, but the mortgage interest statements will most likely be requested. As Jake mentioned, the rental and lease agreements for the covered period will probably be requested, along with any copies of canceled checks. If you pay electronically, any ACH confirmations, anything like that that shows that you did make a payment. And that will be the same for the utility bills. They'll most likely ask for copies of the bills or invoices that you receive from the utility companies. I don't expect them to ask for a service start date document from the utility companies. They might, but I wouldn't expect so. I think a bill will be just fine. and the other interest statements or amortization schedules for your other interest and all of that stuff. So now we're going to actually walk through a scenario that talks about an example employer and their situation and getting the PPP loan, what they get forgiven, and how you calculate some reduction, and what payroll costs are included in the forgiveness calculation. So in our scenario, employer A has 5 full-time equivalent employees as of their selected calculation period, which we used January 1 through February 29th of this year. Once the governor's order came out, they had to lay off 2 full-time equivalent employees, but they were able to keep 3 of their employees on because they could perform work remotely. They were doing some teleworking. This employer applied for a PPP loan and received funding on April 20th, and it was in the amount of $25,000. So now we have 3 different scenarios of what they can do to get forgiveness. In the first one, it's pretty easy. If they bring back those 2 full-time employees as of June 30th at the same position and rate of pay, as in this case, we're using Q1 since they had wages in the most recent full quarter, which is Q1. There's no reduction in forgiveness due to any change in FTE because they've brought those employees back. In their case, the total payroll cost should use at least 75% of the loan proceeds, and the other covered costs should use no more than 25%. So here we have the total loan proceeds of $25,000. The minimum payroll cost would be the 75%. And that's the $18,750. And then the maximum amount for the other covered costs would be $6,250, which would all total up to be $25,000. So they would get the full thing, the full loan forgiven. So this is the ideal situation. In the payroll costs, the different types of expenses you can include are gross wages paid not to be over an annualized 100,000. So we figured out it was Jake and Tony, remind me, it was 15,384 is the most someone can be paid under
Yes.
the PPP to be considered for forgiveness, right?
Correct. That's the max that you can count.
Okay. And then, so we have wages, severance, regular sick or vacation pay. The one item that is not included in this forgiveness calculation is any benefits paid under the Families First Coronavirus Response Act. That's that emergency paid sick leave or expanded FMLA. And those are not included because you're already receiving a direct reimbursement or refund for those wages paid through the reduction of your 941 liability. So you're already getting the benefit of being refunded those amounts, and that's why they would not count towards forgiveness in this scenario. Also, you have your state and local taxes, any retirement benefits, so employer matches for simple IRA or 401k, those can be included. Any healthcare costs that are paid to maintain healthcare for employees are included as well. We have received a lot of questions as far as workers' comp, and we kind of addressed this last time, but we are not considering workers' comp as a state or local assessed tax because you go through a private insurer to get insurance. So it's technically an insurance, not necessarily a state or local tax. If we receive any change in that, we'll include it in the update in our web newsletter. But as of right now, I don't believe that we are including that. Is that confirmed, Tony?
Yeah, there may be some states where it is a state assessed tax, but for Montana, we don't see that it fits the definition, so.
Right. We did have a quick question. I just saw it out of the corner of my eye about employer matches of Social Security and Medicare taxes and whether they qualify as payroll costs to be forgiven. And the employer taxes for federal taxes are not included in the forgiveness calculation. So it's just state and local assessed taxes, and then your gross wages that you pay your employees. So that's your ideal situation here. Now, what happens if the employer does not bring back his 2 full-time equivalent employees, and we have a reduction in wages and we have a reduction in FTE count? So total loan proceeds, $25,000. I made an example and said the total payroll paid within the covered period was $12,000, and that's to his 3 FTEs that he kept on to do telework. We have a decrease in forgiveness of $4,800, and that's 40% of the $12,000 in payroll costs that he would be forgiven, because he kept 3 employees, which is 60%, and let 2, or didn't bring back the other 2, which is 40%. So you have a decrease there. That would take their net loan forgiveness to $7,200 if they didn't have any other covered costs like rent, utilities, anything like that. So we can see with total loan proceeds $25,000, he would only be forgiven the $7,200, which means they would have to roll the remainder into a loan or just return the funds. Unfortunately, that is not the only calculation we have to do on forgiveness when you have a decrease of employees, and we'll talk about that one next. So because the employer reduced the wages of those 2 FTE employees to 0, we have a reduction in wages as well. And if an employee's wages are reduced more than 25% for the covered period, there's a dollar for dollar decrease in the loan forgiveness. So what you have to do is calculate out 75% of what their wages would have been if they had stayed on based on the most recent quarter, and your loan forgiveness would be decreased by that dollar for dollar 75% of their wages. It is a fairly complex calculation. We recommend reaching out to your CPA or your accountant to help in that calculation. I know we have a tool that we've been using to help us calculate that out, because it's not just an easy thing to do, especially if you're basing on Q1 or Q4. So definitely, I would recommend reaching out to whoever you work with on calculating out that forgiveness amount. And then you add that decrease in forgiveness to the decrease from the FTE headcount, and that's your cumulative decrease in forgiveness. So in this example, I ended up with the only amount that was forgiven was about $1,200 in this employer's case. So definitely something to consider as you're trying to bring people back. If you're bringing them back by that June 30 date at a similar position, similar pay rate, then they can be excluded from your calculations. They don't have to be included, even though technically you had a reduction in wages for the covered period. So something to be aware of if you aren't bringing your people back or replacing them with new people. If you laid someone off at the beginning of April or March and they are refusing to come back, you can hire someone else in that same position, and then you have a rehire situation, and they won't be included in the calculations. So it can definitely affect your forgiveness a lot more than I think we initially thought it was going to affect the forgiveness. So that's about the forgiveness calculation. Pretty complex, lots of moving parts. Definitely reach out if you have questions.
Well, Aaron, I think really what we want to emphasize before we get to the massive number of Q&A questions that are posted is really just reemphasize that now that you've got a PPP loan, it is critical that you make a game plan on day one. So you know so you've kind of got a forecast of how you're going to spend these dollars so you don't have any surprises at the end. Mm-hmm. And then also diligence and tracking and working your scenarios. So, I mean, these two pieces combined are probably the most critical steps in this PPP process. So
yeah, having a game plan and kind of projecting out what your expenses are week by week really lets you know or estimate where you're going to be at, and whatever isn't forgiven will turn into that loan at 1%. So it's not a necessarily a bad thing, I would say, but your forgiveness can be really significantly affected by both the reduction in FTE and reduction in wages. So having that game plan will definitely prepare you for success if you use it and stay on top of your tracking.
Great. Well, I think I do have some content that I'm going to cover, but I think I only need probably about 5 to 7 minutes at the end. Let's try and get through most of these participant questions.
Great.
Or a big chunk. So the first one, Aaron, I'll send this one to you, is can a payroll be cut like a day or two earlier from your normal schedule to get it in your 8 weeks? I think there's also been questions about the front end also. So what happens on a payroll that maybe the last, I got my PPP loan funded on the 14th. My pay period is on the 15th. What happens with those wages? And then also talk a little bit about what happens on the back end.
Yeah. So on the front end, if you have wages that were incurred after that 2/15/2020 date, but the pay date itself was within your covered period, we are considering those as wages paid. We're basically using payroll costs based on pay date because that matches up with the payroll reporting guidelines. So it's just if it's been incurred and paid within the pay that covered period, we're considering those wages as a payroll cost. On the back end, you can pay the wages that have been actually earned in the period and pay them. So if you're, let's say the end of your week, your 8 weeks was June 15th and you normally pay on the 16th. Well, the vast majority of those wages were incurred and earned in the covered period. Actually, all of them would be, because it would be most likely June 1st through June 15th. So moving up the pay date, I don't necessarily see that being an issue because the wages were earned and incurred during the covered period. Does that align with what your thoughts are, Tony and Jake?
Yes.
Yeah, exactly. Jake, maybe we've had the example of prepaying wages. Maybe if you could talk about that a little bit too.
Yeah, I think everything Aaron said, and then just really the big takeaway, especially on the back end, is just that, if you're sitting there thinking, okay, I need to spend $5,000 more, and you can't say, well, I'll prepay. That's really the biggest thing. And that's the same with payroll. That's the same with rent. If you really stick to you got to keep telling yourself incurred and paid by June 30. That's really the biggest thing. And then the incurred piece is just after that February 15th, 2020 number. So, Aaron hit it on the head. And then once you, like she said, if you're a week out or 5 days or 11 days, whatever it is, and that next pay period would hit 2 days after the end of your 8-week period, I mean, gamesmanship here, pay on that very final day up to what you've incurred through that time frame. Now that's gonna be wonky in terms of your payroll schedules, but the idea here is make sure we use those funds.
Yeah, and I think I've seen some tools where they're predicting and they're taking a pro rata portion of that payroll and allowing you to pay after.
Sure.
But if you fall inside the language in the act, you certainly won't be harmed. So.
Yeah, that's a great point, Tony. We have seen, especially maybe a larger employee, that could be a task to, I was kind of selfishly thinking about a 3-person team or something. If you've got 100 employees, that's a big thing to do, kind of this one-off payroll. So yes, I do think if you paid I guess what we need to make sure is that if they do pay it afterwards, can we submit the documentation that says we use the funds, we paid after the date, but they were incurred during that time frame? That would probably be that'd be the biggest concern I would have.
Yeah, I mean, you're going to have some financial institutions that will accept that.
Mhm.
I've seen some models built on that, but if you have the ability, the message is to do that interim payroll.
Yep.
Looks like we might have a couple questions about bonuses, rehiring bonuses, whether they're okay to be paid. As long as the bonuses are reasonable, we aren't seeing any reason not to pay those, especially as employees are making quite a bit of money on unemployment. They're making more than they normally would due to the federal unemployment pandemic compensation act part of the act. So if you need to incentivize your employees to come back from unemployment, or you're trying to bring them back, you can do that. It just needs to be reasonable. Also, so our top question is paying out a rehiring bonus out of the PPP to count towards forgiveness. You can just know that if you aren't bringing back all of your employees, you're still going to have some kind of decrease due to an FTE headcount decrease and a wage decrease on those employees. So any other thoughts on the bonuses?
I think the danger, what you really need to make sure the messaging is if there was unemployment paid to those employees, the rehiring bonus doesn't make up for wages that they didn't receive in that time period, because now you've got an unemployment payment problem. So I'll take this next one. If you have temporary part-time employees, do they count towards your FTE count? If they were hired during one of those two time periods, February 15th, 2019 to June 30, 2019, or the first 2 months of 2020. So if you had those part-time employees that were hired and paid in that time slot, yes, they do count towards your FTE count.
We did have a question about receiving a $10,000 grant from the EIDL, and that does decrease your loan forgiveness amount. If you received that in this, for the COVID stuff, you do have to decrease your forgiveness amount by that 10,000. If you don't, you're kind of double dipping there. So, but yes, you will subtract it.
Yeah, that's kind of I think that's ultimately what banks will do. If you go to the language in the act, it says if you received your EIDL emergency grant before April 3rd, it's a reduction. But I believe the intent is that if you received it prior to your PPP funds, there's going to be this assumption of double dipping and they'll want to deduct it. So, little bit of mismatching in the language there, but I believe the interpretation is if you've gotten the grant in advance of the PPP, there'll be a reduction.
I think that's why they clamped down so hard recently. I think they're trying to sort through, if you got a PPP fund, they might be resistant upon sending out that 10,000 just right now to prevent that double dipping.
Yeah.
Do we feel like we answered the question? The next hottest question right now is it an average number of employees during the time period for the head count? In other words, how do we calculate it if an employee left partway through? It's really a matter of, I'll try to address that again. I mean, it's really a matter of a before and after number. And so the before, to make that calculation, you've got those 2 date windows that you're looking at. It's the first 2 months of 2020 where you make the determination of your full-time equivalent employees. It's not necessarily an average number. It's the full-time equivalent, which Aaron described how we calculate that. And then you look at the date frame of the first 2 months of 2020, or the period in 2019 during this time, so February through June, February 15 through June 30, 2019, compare that to your FTE number as of June 30. That's the determination. That it's not an average number during. It's not an average number really ever. It's a full-time equivalent calculation.
Yeah, and that's based on hours worked.
Right. Yep.
Yeah.
Yep.
Yeah. So you're going to plug in a matrix of the hours worked. So if the employee was employed part-time during that, you'll count their hours part-time, and they'll factor out to some average FTE that's lower than 1 when you do the math.
And so I guess the question that just got bumped up kind of addresses is that same issue. What happens if they all get laid off? It sounds like they maybe satisfied the FTE calculation before and after and during their 8-week period, but then by June 30th, they get laid off. I think you have an issue. It's very clear that it's a June 30 determination.
Well, the rehire date is a measurement of June 30. So you can make an employee exempt from the calculations if you rehire them by June 30th. But the measurement of the FTEs is during the 8-week window.
Mm-hmm.
So you're looking at each payroll, and you're going to plug that into a matrix and say, okay, what's my FTEs during this period? So I think from a forgiveness perspective, if you run your 8-week period and then have to lay off your employees, I don't know what that's going to look like, but I think technically it meets the guidance, meets the rules.
Okay.
I would agree. I think it meets the guidance, but there may be questions asked afterwards. That'll be an interesting interesting thing if it happens. So
yeah.
There was a question that was bumped up about quickly before you start on yours, Tony, about the payroll paid since February 15th can be included even if the loan wasn't issued until April. So my understanding, and if you two can also put in your thoughts, is if you had a payroll, like a monthly payroll that maybe was like March 1 to March 31 and paid on April 10th, and you had received the loan by then, you would be able to then include it in your forgiveness. So it was incurred before the loan started, but it was actually paid in the covered period, then you get forgiveness. I don't believe it was paid before the loan was issued, the proceeds were issued. You can include that in your forgiveness cost.
Yeah, you wouldn't be able to reach back and grab those.
Okay.
If you had the proceeds, the capital to pay those items prior to funding of your PPP, those would not be included.
Perfect.
Yeah.
All right, Tony, you want to start on yours?
Yeah, I'll just cruise through real quick because I know we got a ton of Q&A still there. So I just want to mention, we've got this extension bill that's been passed, $484 billion. It's passed the Senate, passed the House. The president should be signing it today. So what's in it? Is there anything that you need to know other than there's more money for PPP funding? So if you haven't gotten your application in, or you're in the pipeline and you just weren't funded before the money cut off, good news, there's another $310 billion there. The thing to note here is there may be some delays because they've earmarked $60 billion of that has to flow through small community banks and credit unions. And the SBA is saying, well, we're going to have to retool our website because we have to track those funds now. This new money coming through. So we have to be able to identify where it comes from. So could be some additional delays there is the message as the SBA kind of retools their website a little bit. They've boosted a little bit of life into that EIDL program as well. So they got another $10 billion for the grants. So we should see a lot more taxpayers who have applied for EIDLs getting those emergency grants. We've seen some in our client base. We've also seen some notification that they've been considered for loan funds as well. That's the additional 50 billion there. So the EIDL's got a little bit of boost there. Big one here is they clarified that farm and ag enterprises are now eligible. So great, we've got some relief for our farmers there. And the rest I really won't spend a lot of time on, but we've got some hospitals and testing funding, and then about another 14 billion that's spread around to some other causes. So real quickly, I'm just going to cover this probably in about 5 minutes or 2 or 3 minutes if I can. What do businesses need to consider in the reopening of the Big Sky? What's the governor's plan tell our employers to do? Really, the message here is you should all be developing a written operational plan that guides you through the opening of the economy through all 3 phases. JCCS, we've taken this action. So if you've got any employees, it's best to communicate what are your protocols going to be as you step through these 3 phases. Second message that we can really emphasize is you need to be fluid in your implementation, because there might be some resurgence of cases that you need to respond and protect your employees and protect your client base, your customer base. And then also reach out to your industry. Within your industry, there's best practices out there that are being developed. I know a lot of you are part of trade associations, probably already doing this, but if you haven't, reach out and look at best practices within your industry and see how those fit with your business. So these are right out of the guidance that the governor issued. So there's that: develop and implement appropriate policies. In addition to that, you need to have some procedures for monitoring your workforce and making sure you're taking care of people that are symptomatic and those at the highest risk. And then also something in there where you're tracing workforce contact if you've got any positive tests with an employee. So moving down, in general, all employers at phase 1, really not much change here. So we're still encouraging all telework. If it's not feasible, do some kind of staggering schedules, close common areas. Non-essential travel is still held to a minimum. And then of course, consider your most vulnerable population within your employee base and make some special accommodations there. Phase 2, not a lot has changed there from an employer's perspective. This is a little bit different from the federal recommendation. So Montana's a little bit more conservative here. So non-essential travel still suggested limited, and then teleworking. Phase 3 is kind of that opening up the doors, unrestricted travel, and restaffing your sites. So a couple of specific employer types here real quickly. The big one probably is restaurants, bars, breweries, distilleries, casinos. This is different than the federal guidelines. Those can become operational phase 1. I know a lot of people are excited about that. Obviously, there's some physical distancing guidelines that they'll need to adhere to. And then, of course, hard close, all patrons out at 11:30. So moving down to the next slide, we've got another one that's different than the federal guidelines. Some people are not real happy about the gyms not opening up. So those remain closed in phase 1. Places of worship can open, and we're still looking at limiting the gathering size to 10. Other places of assembly like movie theaters, those are also staying closed during phase 1. Phase 2, really to note here, there's not a ton of change. Child care facilities can now start to increase their capacity. They were included in phase 1 where they could open up. But really no changes in the bar, restaurant, still those physical distancing limitations. Finally, on phase 2, we get gyms and pools can open. I should mention back in phase 1, all Main Street businesses can open with kind of some guidelines on physical distancing. Under phase 2, these other places of assembly can start to open up. and that grouping number of 10 people now changes to 50. And then lastly, phase 3, this is kind of that general opening up. Probably for Montana, the biggest one here is, maybe if we just bump to the next slide, I believe, I mentioned it. Oh no, go back one slide, sorry. So the big one on phase 3 is the tourism industry kicks in. That's that outdoor recreation. So not until phase 3 will we see kind of that boost in our tourism. So I'm gonna just kind of stop there, and we're at 10 o'clock. So if anybody needs to step away, you know, we appreciate you joining us. We're going to stick around. We've got a ton of items in the Q&A still. So we'll continue to answer those questions. But those of you who need to get on with your day, certainly thank you for joining us. And if you have additional questions, you can dial into this recording either on Monday or reach out to your local JCCS professional and try and get your questions answered. So, all right, let's go back to the Q&A.
Should we just start at the top and work our way down?
Yeah, I think so.
Yep, I can pick off probably the first couple ones here. One just bumped up to the top, which I can do. What about trash service? Is that also considered a utility? Under the definition in the CARES Act, trash is omitted. So was that by intent? We don't know. But I would operate under the assumption that it is not included. And as Tony had kind of mentioned prior, remember, we're submitting these forgiveness applications to the lenders, and each of them might have their own little nuance where they say, yep, that's fine, throw it in. We interpret it that way. So either we're going to get more guidance on that, or I think out of just conservatism right now, trash is not included. It's not in there. And there's kind of another one along that lines, is garbage included as well as janitorial. Again, janitorial not listed. Seems like a utility. Maybe it's been coded as a utility in the past, but if they need details of that, right now it's currently not listed. So I would omit it out of conservatism. And then the home office, it's a great question. I think that's kind of one of the big looming questions right now on the surface, and out of just pure common sense, which is always dangerous with this kind of thing. It sure seems like that should count, the applicable percentage. There's no mention in any guidance on whether it is allowed or not. So again, if you, I would be cautious in using it. I don't think I would include it at this time, but I'm hoping that we get more guidance on that. I probably should just leave it at that.
Well, I think it's going to be a bigger hurdle to get over because it's really not a direct expense. And also in your home office deduction, you can have more than just mortgage interest and utilities in there and rents. You can have some repairs and some other things.
Right.
You can, I guess maybe the recommendation is you can submit it to the bank and it's up to them to accept it.
Yeah.
But definitely, I think it's a higher hurdle to get over.
Yep. Agreed.
We have a question about salaried employees and calculating FTE. Most of us, at least I think most payrolls that we run, we are using the regular full-time equivalent for employees, which is either the 30 hours a week for 52 weeks a year, or if we were using I know before we changed over, we were using 40 hours a week for 52 weeks a year, and we've just been defaulting to that for salaried employees. You wouldn't want to count any more than 40 hours for those employees when you're calculating FTE.
So I'll take the next one. So question is, what specifically can you use the PPP funds, or more specifically, what can you not use them for and get forgiveness? Really, you've got payment of employer portion of payroll taxes are not allowed, and really any amounts that are over that $15,384 for your highly compensated individuals, those are specifically not going to count. We also already talked about unemployment. and some other covered costs that people have asked about. But I think really the ones that bubble to the top for me are your highly compensated individuals and employer portion of taxes.
And that should be the federal employer portion of taxes.
Yes. Yep. Social Security, Medicare. Thanks.
Yep.
And that $15,000 number we keep rattling off is the $100,000 wage limitation annually divided by 52 times 8 to get to that 8-week period that you can use the funds. They are saying that that's the most you can compensate because they're limiting compensation to 100,000.
Yeah.
So
and
just to clarify that.
And to be clear, you can pay your highly compensated people more than that 15,384, but you can only count. So you'd have to use other operating proceeds. Your use of your PPP funds would result in those funds not being eligible for forgiveness.
Yep. The next question is, if I didn't mark on the PPP application that I was going to use these funds for utilities, but now we may, is that a problem? Boy, I would hate to think that would disallow you. I think that at the rate at which we had time to understand this application and just that hyper speed, I think that would be a technicality that I would just feel horrible if it was disallowed. So I doubt it. But I mean, maybe. I don't know.
Yeah. Again, you're going to deal with individual banks. They're receiving guidance from the SBA.
Yeah.
They're all making their own interpretation of this as best they can. So you might see some variability there, but I would agree with Jake. I think that would be a horrific misstep on the banks to not accept those.
Yeah. Next question is a little bit more theoretical. Why net earnings, not gross earnings? I'm thinking that's the question based on determining your compensation, maybe for a self-employed individual. It's basically because that's what you paid self-employment tax on. There's really no other metric that they have to make that determination. So just kind of that's the rule.
Yeah, it's basically your wage.
Next question as well. This one is going to be a pickle for a lot of people. I have a fixed rent, very consistent. I've got all the documentation in the world except for that signed lease agreement. I mean, written in the act is that they want a signed lease obligation. So, but will a bank take all the documentation in the world and allow that in lieu of a signed lease agreement? We don't know, but we are advising that the signed lease obligation and agreement be included with your forgiveness application, and appears to be a requirement.
Question on supplemental insurances being allowed. So we're talking about accidental death and disability, dental, maybe life insurance, some of those other benefits that are provided to employees. The CARES Act only identifies health insurance. So that's the only thing that we're counting in our formula is health insurance costs.
And just so everyone knows, we're looking at those questions that you are voting up. So if you do see another question that someone else is asking, vote that up so we can get to your question. Because we have about north of almost 100 more questions to try to get through. So if you can vote up a question you see, it won't take many, it'll get up there. So we've just found that's the best way to try to get to as many people as possible here.
Aaron, you want to take the next one? What if we hire additional people during the covered period? Does their payroll count towards the PPP?
It does. So it still is gross wages considered in forgiveness. The only thing that would, the only calculation that you wouldn't do, like for them, you wouldn't have a reduction in wages. You're increasing your FTE count there by either a percentage of 1 or 1. So their wages still count towards forgiveness. You just don't have to include them in your decrease in forgiveness calculation.
I'll take this next one. Now we've got a question that's, it's been asked by a bunch of different clients, different settings, emails, phone calls. So if you've got a business and you just can't bring your employees back during your 8-week period, what's this June 30th measurement? So let's say we finish our 8-week period June 15th, and then we bring back employees at a full-time status on June 28th. Can we exclude them and possibly change the measurement of what our forgiveness is? Absolutely. So you've come to the end of your 8-week period and you don't have to automatically request reimbursement or apply for forgiveness at that date. You would go to June 30th, then do your measurement of, did I rehire any employee that's going to affect my calculation, and do your calculation post June 30.
That might answer those two questions right on top, Tony.
Okay. So, I think that incurred, so the act was written to talk about this period of February 15th, 2020 to June 30th. And that is the period in which eligible expenses can be incurred. People are going to get their PPP loans at different stages. So incurred may reach all the way to June 30th if you don't get your funding until a pretty late date. But if your 8-week period ends before June 30th, you can't reach forward and grab expenses that are incurred after your 8-week period. So yeah, maybe a little bit confusing about that June 30 date on the incurred side.
Do you want me to fill the next one here? So looks like, well, maybe now it's the second one. We have a S Corp, a 2-person S corporation. They've continued working and received their normal, regular, biweekly payroll. And then they just recently got their loan. So payroll from 2/15 to current uses my entire loan. So would it be forgivable? If I'm reading that correctly, you've already paid the payroll.
Mm-hmm.
So no, you have to use those funds at this moment going. Once you have the funds, you have to, it's what you use those funds with at that moment for the next 8 weeks. So yeah, unfortunately, if you had not paid yourself, that goes back to the incurred since 2/15 and then paid within your 8-week period. So at this point forward, you now have to, it's your payroll incurred and paid at this point forward. If I'm understanding that correctly, I'm not sure, but I think that's how I interpret that question.
Yeah, we can't reach back to wages that were already paid before our 8-week period.
Right.
Can one of you do that, the top one about S Corp distributions versus payroll?
Yeah, I'll read it out loud and then we'll see, Tony, where we sit. So it's an S corporation. We have the money, the PPP money. Last year, owner had an $8,000 payroll. I think it'd be interesting to know when that was paid. I was not okay. However, the bulk of this pay came through draws. This year so far, only been paid through draws. Can I put him back on the payroll for 2 months? So really, we just need to be, so the answer is you can start paying an owner. This speaks just in general that we need to make sure that, someone is compensated appropriately. So there should be documentation in place that based on hours, how much they're working. So we should be working on a plan to make sure they're paid appropriately. I understand that, sometimes it's a function of cash flow sometimes, but to determine how much of those funds you can use for payroll, as long as it's documented that they're working and the compensation level is reasonable, yes, you can put them back on payroll for this time. That's what the purpose of this is for. Now you have the task of determining, are you underpaying? What's your full-time equivalence? And then that's just harping back to what we've been discussing this whole time. So shouldn't be a problem getting that person back on payroll. No. Any other thoughts, Tony?
No, I think you're right on point. The answer is yes, you can put them on payroll. And really the bigger question is, if that 8,000 fell in the last full quarter that employee was paid, they must have some compensation in the 8-week period. Otherwise, you're going to miss an employee that should have been paid.
Right.
So that's kind of one of those missteps that we're talking about in your planning, is if this 8,000 fell in Q4 or the last full quarter that that owner was paid, then you've got to make sure that you cover that in your 8-week period. So that's a big deal.
Yep. Comment on the utilities. A telephone provider only puts things in your personal name. Not sure how that's going to be handled. Again, the way it's written, it says it's got to be a business utility. So that's kind of going back to whether it's in your name or not. I would hope to shout that a bank is going to work with the person, but the technicality is that it's a business utility. So if it's not, it's potential that it might get thrown out. The potential is there for sure.
I'm going to take this next one. Can I use the loan for any business expense if I'm not worried about forgiveness? I would caution you against that. There's specific language. There's specific language on what the PP is eligible to be used for. And if it is not used for those intended purposes, the SBA has some recourse against the business owner. So not only, if you're not worried about the forgiveness and you just want the 1% loan, that's not what this is for. If you need funds, that's what the EIDL is for. So if you've got a decrease in your revenue, increase in supply chain costs, then you need to look to the EIDL if you've got some economic injury. But I would stick to what the intended stipulated uses of the PPP are for.
So I'll take this next one about the reason to calculate FTE and weekly average, and whether it's an aid for the projection process, or do the average amounts dictate how much of payroll costs can be forgiven. And it's both. You need to calculate out your FTE so you know if you have a decrease or increase, which will affect your forgiveness amount. You also need to know what your weekly average payroll is so that you can calculate if you had a decrease or increase in wages paid to any given employee or position, because that will also affect your decrease in forgiveness. So you want to calculate that at the beginning just so you know what your levels are of where you should stay if you want to get everything forgiven. But you do also need to calculate those numbers so that you know what kind of decrease in forgiveness you're going to have, if any. And if your payroll costs exceed the averages from the calculation period, that should be fine. If you have a really, really significant increase, I would make sure that you have documentation of why. Is it because you had 3 pay periods instead of, or you had more pay periods than necessarily you were expecting? Or maybe you paid a couple days early to pay those incurred wages get it in the covered period. Just making sure that you have some kind of documentation of why there was a significant increase.
And Aaron, just write 2 questions down below that. I think it really fits in with this same question. It's talking about full-time and part-time employees.
Yeah.
So make sure that people don't misconstrue when we say full-time equivalent. We're still including all part-time employees. They just might be a 0.5 or a 0.3 FTE in the calculation. and then maybe just talk about hazard pay.
Yeah, your part-time employees may not be considered one full-time equivalent based on the hours worked. So if we go with the 30 hours a week as a full-time person and you have two people each working 15 hours a week, they would each be a 0.5 FTE. So combined, they equal one full-time equivalent. So you're definitely still including your part-time people in all of your calculations, your FTE calc, your wages decrease or increase calculations, because they're still included. They just aren't a full 100% full-time equivalent. You can pay hazard pay. Again, this is one of those things that I would have some documentation about. You're fine to increase wages over that 8-week period. Just making sure that you have some documentation of why you did that increase. I don't know if the lenders are actually going to ask for that, but I think it is good to have it on hand just in case the question's ever asked, or the SBA is like, why are your wages so much higher? And well, I paid hazard pay because my people, were working in a hazardous situation. So I think we just need to have some documentation on why the pay was increased for a given period. Maybe it's time for their regular annual increase and you still wanted to do that. And you could do that now that you've received the PPP funds. So documentation is definitely important. And I would say more documentation is better than not enough.
Yeah.
I'll field the next one. They're asking for clarification a bit on rent. Is that rent for just real estate, or can rent for a personal property be used? We did get some SBA guidance for the self-employed individuals, which I would hope to think we could extrapolate over to our S Corp and LLCs, and they have carved out a specific piece where it can be rent for a business vehicle. For example, not just necessarily rent for a storefront or something like that. So, and even rent of a storage unit has been listed as an item. So again, I think within the meaning of the term rent, if you've got a obligation in place prior to February 15th, and you didn't just go out and lease a vehicle yesterday, yep, you're going to be in good shape for that in play rent prior to February 15th, real estate or personal property. So great question.
So I can take the next two here. So the staffing agency question. So if you're a business and you hire all your employees through a staffing agency, there was guidance issued that says that you can receive reports from the staffing agency, so you can count those employees as yours. The staffing agency does not include those as their own employees in a PPP. They're looking to get to the end user of the employee for that. And then also I want to kind of just address this question about what if the country's not open and I've got a PPP loan and I can't bring my employees back by June 30th. So you've got two decisions here. You can say, okay, I don't need my PPP loan and I'm going to send it back. So they've made clear guidance now. They issued an additional FAQ the other day that said if you determine that either you weren't eligible, I made a mistake and I really didn't have economic harm or uncertainty, I got to send it back. Or if you just know you're not going to be able to use it, send it back. Or you can pay your employees to stay home. So the main intent of the PPP program was to keep paychecks flowing to employees. So if you want to follow through with that and pay employees to stay home, that would be your purview. Otherwise, the message is send it back.
Did you get the second question that you said you were going to tackle, Tony, or did another one pop up?
Yeah, I got them both.
Okay.
I don't know if I've cleared it, but
top question, right? Oh, go ahead, Aaron. Go ahead.
Well, there are a couple questions about the leftover funds after the 8-week period and whether You can keep them and still, like, if you don't use, not everything gets forgiven. And what you can do with the rest of those funds that just roll into a loan.
So again, the act calls for what you can use it for. Certainly, you're going to have payroll costs, rent costs, utilities after the 8-week period. You've missed your measurement for forgiveness, so you should still follow through with the intended use of those funds. They're just now a loan and not eligible for the forgiveness portion. So, but once you clear the 8 weeks, doesn't mean all bets are off and you can use it for whatever you want. Still have to use it for the intended purposes.
And you could certainly send it right back.
Yep.
Right? If you want to get that off the books.
Yeah. And I will say, you know, I've seen several articles saying, yeah, but who's really checking? So I would just caution you not to get caught in that trap on, you know, who's really going to know. So.
Next question is, I've got the PPP loan and I've got the EIDL loan. How do I give the EIDL loan back? Gosh, I haven't even, I'm not sure if I know how. Does anyone have is it just a matter of paying it back?
Well, so it depends on if you're talking about the grant, the emergency grant, or the loan. So if you've got the loan, there are no prepayment penalties, and that will be paid back to whoever the lender is. So if that's directly through the SBA, then you can prepay that back to the SBA. If it's through a financial institution, you can prepay that back to the financial institution. Obviously, I think it's probably too soon for any EIDL proceeds to have a loan document attached to it. So you probably have no mechanism. There's no loan number assigned to it. You probably have a PPP loan number, certainly. And if you're talking about the reduction of the PPP forgiveness based on the fact that you got the emergency grant advance, then you can just, the emergency grant is free. It doesn't have to be repaid. However, on the PPP side, you're going to end up with, let's say you got $8,000 on your emergency grant, you're going to have $8,000 on your PPP loan, and you can prepay that at the end of your 8-week period.
Great. Do we have any information on the EIDL? This person applied the day of the first webinar we had and received one email from the SBA clarifying that we're maybe not going to be able to service this. They've asked me for my operational costs. Is EIDL an option? I mean, the EIDL is certainly an option, and our clients, and I can echo this person's frustration, and also represent several different clients who have received this same message. The funding has been not up to par with what they promised, the 3-day turnaround, getting the $10,000 grant. Very few people, just in the past few days, it seems like, are finally starting to trickle in. It is kind of $1,000 employee type limitation. I've seen one where it wasn't. It was they got 1,000 and there were 2 employees. So I just think they are so bombarded right now. And the process of the EIDL inherently is a little bit more due diligence than the PPP was thrown together. And so I think they're vetting that. And that's the time crunch that we're seeing. So as Tony mentioned, more funds have become available for this program. So I would really hope to expect to see more communication, more dollars flow. So we will see. We will see. Any comments to add on to that, Aaron or Tony?
No, the only thing that seems to be similar across people that are receiving the $10,000 or whatever the amount they're receiving is that they're surprised by it. Like all of a sudden it shows up in their bank account and it's like no confirmation number, nothing like that. It just shows up. So right. That seems to be the common experience. So yeah, that's the only other thing about the EIDL. Not very well administrated right now.
Yeah. So we're coming up on 10:30.
Mhm.
We are holding very strong on number of participants. Do we have any time frame on limitations here, or there's still quite a few outstanding questions. Any thoughts on that, Tony?
Well, I'm fine sticking around and trying to chew through a few more of these. I think some of these are going to become repetitive, so maybe we can click through the repetitive ones. But
Okay,
if you guys are game, let's stick around for another 15 minutes, and then we'll
for
do
sure.
a hard cut at 10:45.
We've found in the past too, we've tried to, we're unfortunately going to have to limit our answers to this time that we have here to answer the entire Q&A is just not quite as efficient. So we encourage you to reach out to either one of us, your CPA that's hopefully with us. If not, reach out to your CPA for maybe clarification on your particular question. So for those that are still with us, thank you. And yes, let's do a 10:45 end time goal here. So go ahead, Tony. Yeah.
Oh, so just real quick, there's been some rumors that the 8-week period is going to be extended. Nothing hard and fast on that, and there's nothing in the extension bill that extends that 8-week period. So that would be additional guidance if we find that businesses are having trouble. But that first question there, the second round of funding has the exact same 8-week period.
Great. Can you reduce pay more than, this is a great question. Can you reduce pay more than 25% on an employee being paid more than $100,000 as long as the reduction brings in to $75,000 or above? Tony, you want to field that one?
Sure. So in the guidance specifically, if you have a highly compensated individual that makes more than $100,000, you can pay them zero. They are exempt from the reduction calculation in dollars paid. So the intent here is that you've got highly compensated individuals who can choose to be paid less, so the lower paid individuals can receive money in these economic uncertain times. So those highly compensated individuals certainly can be paid, but they can also be paid less than 75% of their 100,000. They're exempt from that calculation.
Great. The top question, I think we've kind of answered PPP funds and EIDL funds, difference in forgiveness. As Tony mentioned, it probably depends, when you receive that money. There's some language that if it was received before April 3rd, that it would potentially be forgiven. So I think we just have to, and it depends if it's going to be wrapped into your PPP loan. You want to emphasize on that really quickly, Tony? Your thought on that?
Yeah, so the language says if you got the EIDL before April 3rd, that it reduces, and we're talking the EIDL grant, the emergency grant advance, that reduces your PPP forgiveness. But we don't know what's going to happen if you got your EIDL advance after April 3rd. It makes sense that if you've gotten them both in the same time frame, they're going to want to prevent double dipping, and they'll reduce your PPP forgiveness by the EIDL grant advance. So again, we're using common sense, which doesn't always pan out, doesn't come to be true.
So the next question is, we've had a decrease in clients and our employees do not want to or are refusing to work at this time. Will this still count as a decrease? This will still count as a decrease, correct? So I believe are we talking about full-time equivalents there? Is that how we're interpreting that one?
That's how I would read it. And, unfortunately, I think that is a yes. So what you've got here is if your employees are refusing to work, do not want to or refuse to work, you've got a couple of things. If you don't have work for them, you can rehire them by June 30th and have them exempt from the calculation. You're just going to spend less. You've also potentially got an offer of employment. And if they're receiving unemployment, Aaron, you could comment on that. That's going to affect whether they're even eligible.
Yeah, if you have employees that are on unemployment or are refusing to come back, the unemployment insurance division actually just sent out an update yesterday about updating or amending your unemployment forms that you filled out for your employees. It kind of walks you through how to update that and let the UI department know that they've received an offer but are refusing to come into work, which would affect the employee's eligibility for benefits. So if they are refusing to come in because they're on unemployment and they like that, then you would want to update the UI department on the fact that they've been offered a job and have refused it, because that will affect whether or not they get UI benefits.
Tony, do you offhand know the term length of the EIDL? I think the next question asks if the EIDL should be classified as a long-term liability. I think if you're looking at the grant component, in theory, it's a grant, so that should be that'd be non-taxable income. And then the beyond that, I'll defer to you if you know the length of that loan.
Yeah. So if the grant, obviously, like you said, that's income. But if you get funded an actual EIDL loan, which I don't know if anybody has received an EIDL loan, that would be long-term liability. Yep.
Great. I'll field this one. Any guidance for forgiveness for an LLC partnership? Does the 8 out of 52 rule likely apply here? So this is for all of you out there that are probably either a 2-3 person partnership. It's possible that you do not have payroll. And so your partnerships were probably tasked with the kind of the unknown there for a while to try to apply for the PPP because you weren't paying payroll, yet you had flow through earnings that were being subjected to self-employment tax. And that's kind of a whole nother topic of discussion. But what I would say is that first is there's no specific guidance yet on this. However, it sure does seem as if it should align with the 8 out of 52 rule. I would say that is a very conservative approach. But I just have not seen anything that has shown anything to the contrary. So I guess in theory, the thought process here would be that whatever my draws are at this time, could those all be presented as being for loan forgiveness? There's no limitation on that yet because you're technically not considered self-employed. Yet some of the guidance that I have read does read specifically for partnerships that are using this flow-through income subjected to self-employment tax as the equivalent of a Schedule C. So it almost does. It feels as if the 8 out of 52 rule should apply. But again, very conservative. Best case, they allow all draws as long as that you do subject them to self-employment tax. And where where I'm kind of spitballing on this one, if you were to run draws at this point rather than draws, call them guaranteed payments. That is something written in play where originally partnerships were to apply for PPP loans based on how much was ran through guaranteed payments. That's a little bit more aligned with a W-2 treatment. So I don't know, any thoughts, Tony or Aaron, on that? Little of an unknown area, really.
Yeah.
So, okay.
Question here again about use of, so if we've got the EIDL and the PPP, and the EIDL is deducted from the PPP, so really there's this assumption of double dipping. So the question is, well, what do I use the EIDL for? Certainly you would use the EIDL for those stipulated purposes for, what the EIDL is for. If you're in the case where you've received the EIDL emergency grant in advance of your PPP, you know it's going to be deducted, so you can use those the IDL on the payroll costs.
Great.
One on payroll services, Aaron. Does that count as a payroll expense? Can you pay JCCS?
I haven't seen that question before, and I haven't seen it addressed anywhere. I would not expect it to count because it's not an assessed tax. It's not a benefit it's not a benefit for the employee, like healthcare costs or retirement benefits are considered. So I'm going to say no, but more based out of extrapolating off of those other items. Have you seen anything else? Have either of you seen anything else on that?
I mean, it's a professional service cost, so I'm in your camp, Aaron. It's
Okay.
a no for me.
It's not included in the definition.
Would have been nice though.
Soften the blow a little bit. Yep. Let's see.
There have been a few questions about kind of back pay. Again, I know we've touched on it. Maybe this person's question's already answered, but say Aaron, we dropped down to halftime before, and now can we back pay? Can we pay those people based on the payment we didn't pay? And I think the caution there is, were they paid unemployment, those kind of things. So we reduced their wages to 50%, and now we want to make it up.
Yes, you are right in that if the people were taking unemployment for the other half, so they were doing like a job attached hours decrease or wage decrease claim with unemployment benefits, you wouldn't be able to go back and catch them up. If they weren't though, it was incurred from 2015 to current, you might be able to justify that. Because if it was a voluntary, hey, I'll decrease my wages so we can keep everyone at least getting some pay. I don't necessarily see an issue with that unless we have the UI problem, and you would really only want to go back to the 2/15 date. I think that's my thought on it, is you just have to be careful about it.
Definitely. I mean, I think comes into play, you got some hour and wage things where they're actually working full time and you're only paying them 50% of what they should have been paid. Or maybe you were just paying them 50% to stay home. I mean, there's a lot of just factors in there that you probably couldn't answer.
Mm-hmm.
You'd want to look at the specific scenario.
Yeah.
But I mean, again, we're saying if you had to underpay your employees and you don't have an unemployment issue, you can pay them some type of a bonus to return to full time as long as it's reasonable, or hazard pay, those kind of things. So,
Tony, I'll tee you up with this one here. I think you know this one. If employer retirement matching is normally paid annually for the previous year, should we consider matching retirement contributions kind of to date? During the time we can spend these funds.
Yeah, certainly. I mean, you want to look at, the entirety of your PPP, and do you need to include those things? So if it's a matter of forgiven or not forgiven, then fund that retirement on an interim basis, get those costs paid in your 8-week window and get them counted towards for forgiveness. Absolutely. So.
And is it right to assume that they could use the period of February 15 through? It should be on the time frame of those wages that you've paid during that time.
Yep,
correct?
Exactly. Yep.
So maybe if there's that overlap of paying that first payroll might include some payroll prior to the funds received. You've incurred the wage, so you're paying that wage. It's safe to when you're paying that wage, you can do it on the wages paid for that period.
Yeah, and
Correct?
I think you would just need to do a supplemental calculation that you would submit with
Yep.
your application for forgiveness. It
Yeah.
says these are my wages, this is my matching requirement, and here's the payment attached to it.
So the question asked, I think, mentioned wages paid for the year kind of to date. And I think we just have to be cautious to say that it's during that PPP funds
Yep.
payment time. Okay,
Yep.
great.
And we will be making, the PowerPoint slide deck will be available on our website with the recording as well. So that's there. Once that's posted, the slide deck will be able to be downloaded there as well. So I think we're at 10:45. We've managed to get more questions answered than are still left in the queue. So I think this is a good time to sign off. And if your question wasn't answered, you're still on, please feel free to reach out to us, and we'll get your question answered via email as soon as we possibly can. So again, thank you all for tuning in. I know we still got 120 or so people listening as we go on. So
Thanks, everyone.
Thank you all. Have a good day.
Thanks for joining us.